critical. Joining me now, Walser Wealth Management President Rebecca Walser. You know, Rebecca, we started just now a minute ago. We flashed up this S&P Global release. Beginning of the year, they had the top geopolitical risk. And it's really an amazing table, amazing chart. At the very top of it, U.S.-China relations. And I think about this because China's their housing market, their commercial real estate market has imploded. Their stock market is in free fall. And the more desperate they become, the more difficult it's going to be for us to have a cooperative relationship with them, right?
You know, Charles, like literally, I think 15 days into the new year, China's government was talking about having to pivot and stimulate. And then obviously with President Trump's interview with Maria Bartiromo on Sunday, talking about potentially tariff even larger than 60%, we're seeing this market tank. Rightfully so, though. I mean, China has a long history of artificially propping up their GDP. And with the forced liquidation of Evergrande, I mean, this is what's happening in the Chinese market.
The second big risk that they point out there are cyber attacks. Those are, you know, obviously we've gotten kind of used to them, but they're getting more sophisticated, more dangerous. And, the Houthis, at some point, they're not going to attack us with missiles. They're going to try and bring down our electric grid.
This is exactly one of the biggest risks right now, Charles. We're hearing even in Vegas with the Super Bowl this weekend, the large concentration, not just cyber attacks, but blackouts, electrical grid blackouts and cyber attacks. So you're talking about a disruption of both electricity and the internet. And that really can, incapacitate people and certainly will make people extremely leery of, hey, what is going on? Does the United States have the ability to protect us, unlike the Chinese balloons that happened last year?
You know, they've got deglobalization down here on the list. And, this is one of those things I'm not sure I agree with. This is the S&P. Listen, their whole thing is that, they want fat corporate bottom lines. I think there's some good to us being able to, like, for instance, should we sell U.S. steel to Nippon steel? I like the idea of some deglobalization. Listen, global trade has always existed. It always will. But I feel like we became too dependent on countries like China anyway.
I think instead of just deglobalization, we're talking about a move from singularity of hegemony, dollar hegemony as the world reserve currency or this main world reserve currency, because Forex has obviously dropped massively in the last several years. But if you are looking at the BRICS bloc and their potential introduction of a new alternative global reserve that is backed by precious metals and rare earth metals, in other words, i.e. backed by hard assets, that is talking about potentially on the West, the SWIFT system, the system that is still relying on the dollar as the underlying benchmark. That is where the concern is, that would we be pushed back into a corner to make our assets and our dollar backed by something that is real, true, intrinsically valued assets again, and not just fiat currency, the full faith and credit of the U.S. Treasury. You
know what? Maybe that would make us embrace the oil that we have, right? Maybe too late for the gold because all these central banks around the world are bought